The force surrounds us and penetrates us. It binds the galaxy together. You must unlearn what you have learned. Every aspect of your life is impacted by taxes, whether you know it or not. This podcast will educate you and also uneducate you. The latest clickbait tax trend. Is it accurate? This is a podcast for regular people. It may be hosted by a CPA and certified financial planner, but it's not for us. Instead, this is a chance to tell you a story about how I use tax law, yes, tax law, to save a couple's marriage, or the time financial planning prevented the estrangement of a father and his daughter. I'm Cecily Welch. As the accountant you can understand, I help people navigate and understand the one thing that impacts every financial aspect of your life, taxes. This is the Tax Translator Podcast.
Hey, listeners, you're not crazy. The Tax Translator podcast is on 2 channels, and that's on purpose. The Georgia Society of CPAs YouTube channel, because us CPAs have to get continuing education credit, and the Cecily Welch, the accountant you can understand YouTube channel, for us regular folks who aren't worried about credits. Both podcasts are the same, but please do us a favor, subscribe and like in both places. Thanks.
Welcome to the Tax Translator Podcast, where taxes speak human. I'm Cecily Welch, the accountant you can understand. I help people navigate the one thing that impacts every aspect of their financial life, taxes. I know as a CPA and certified financial planner, if you have any thoughts about financial independence or wealth, you ignore taxes at your peril. Today's podcast is going to be a little different. No guests. Instead, I'm going to tackle one of the things that we CPAs hear all the time. And I'm going to actually go into a deep dive to show you, not just in theory, but actually show you why it matters. You know, I'm all about pragmatism and being tactical. Why does this stuff matter to you? I'm here to help you figure that out and also to help you be clearer about expectations. The normal disclaimers: I'm not your CPA. This is not specific tax advice. As a matter of fact, we want to help you. I want to help you work better with the professional you already have. Please consult your professional. This is an educational podcast. So when I say go into a deep dive, what do I mean? So if you've ever said the phrase, oh, well, taxes have already been paid on that, so we're good. I've already paid taxes. Or if you've ever asked your CPA, or rather mentioned to your CPA, I got a bonus that gets taxed differently, right? This is a stipend. How is that taxed? All of these different phrases we hear all the time. And because we hear it so frequently, we do understand that it's very much a misconception and misunderstanding. So I want to kind of spend some time explaining what I mean. Basically, a paycheck, a bonus, a stipend, compensation, current compensation that you get. I don't care what you call it. A rose by any other name, right? It's still income. It's still taxed as just regular old ordinary income. We call it special names for different reasons, but it's just regular old income. And what do I mean by that? I'm literally gonna go into a deep dive. So maybe grab a cup of coffee. It's not gonna be too bad, I promise. You're gonna get this. And more importantly, you're gonna get why you need to care. Okay, so I am going to do a couple of numbers here, and I'm gonna walk you through the numbers. It's not that difficult, but it's conceptual. I need you to pick up on this. When we hear things like, oh, well, I've already been taxed on this, we just throw us over the cliff. It drives us bananas. And we as a profession, maybe we're a little short with our responses and don't do a good job of actually explaining what we mean and why. Okay, so a W-2 is a W-2. What do I mean by that? You get used to seeing your particular employer's way of giving you the information. W-2s have standard information, but they don't necessarily look standard. So I've got here multiple examples of what a W-2 may look like. These are just 3 different ones. It kind of depends on what who your employer uses as their payroll provider. But it'll look a little different. But you see, all of them have the same boxes. We've got wages, tips, other compensation in box 1. We've got withholding, state withholding, local withholding. You may live in a city that has a separate tax and a separate taxing process, etc. So all the information is there. And you see these numbers also can be different. Social Security versus Medicare, etc. Same information, just in different places. Why does this matter? Let me tell you why this matters. My particular favorite W-2, if you can have a favorite W-2, is this particular format that I'm showing here. And the reason is because, I need to delete my circles here. There we go. And now I need to get them back. The reason is because this W-2 actually shows you how it came up with the calculation. All the other ones just show you this box. But remember I said income is income. I kind of don't care what you call it. As long as it's current compensation, there will be a whole different podcast talking about alternative forms of compensation. But if you're currently getting paid by your employer, it's compensation. So what goes into this box 1, wages, which is just taxed as regular old ordinary income. I like this particular type of W-2 because it gives us the detail. Where does this number come from? In this instance, it doesn't matter, but it will in a minute. It will in a minute. All right, let me select this, hit the next button. All right, here is where I said it will matter in a minute. Okay, I'm Diane Carroll. I made $200,000 this year from my company, whoever it is. So that all falls into box 1. But throughout the year, I've been talking to my CPA and I said, hey, can you give me an idea of what my taxes are going to be like? And I say, sure. Let me know what your salary is. Well, I really just kind of want to know what's my tax on my bonus. And your CPA goes, excuse me? Well, I'm getting a bonus this year. I made 4 different movies and they gave me a bonus in addition to my regular salary. My regular salary, I've already got taxes on that. I just want to know what my bonus is. What's my tax going to be? And we kind of give you a look like I have no idea. Your taxes are calculated in total. There's no such thing as bonuses are different, stipend is different, commission is different. Withholding might be different for different types of current compensation, but not your actual taxes. Withholding is just a deposit on what you will eventually calculate your tax liability to be. So we actually, let me go to the next slide. Let me go to the next example and show you what I mean. So in this case, we know that wages and tips, box 1, that is ordinary income on our tax return, is $200,000. Well, $205,240.68, if you want me to be exact. All right. So what is that actually made up of? Remember, I said it's just the $200,000? Well, if I actually look at the detail on my favorite W-2 form, it's telling me that $205,240.68 that I was paid is actually made up of multiple types of compensation that my employer has given me. I got paid some commission. I got paid some relocation. I got a year-end bonus. And I got my regular old, the whole salary and the W-2, all that. That all totals to $205,240.68. That's all ordinary income. I don't care. The IRS doesn't care. Nobody else cares that it's called a commission or that it's called a stipend or it's called all those different terminologies potentially allow different types of withholding, but does not change the tax liability. What do I mean by that? I'm about to show you what I mean by that. All right, let me go on to the next slide so we can see. Let's talk about some actual numbers, okay? I want you to understand this conceptually, and the way to understand it conceptually is to actually look at the numbers. Your regular old tax return, you've got that box 1, which includes everything that just gets reported on line 1 of a regular 1040. So my W-2 salary shows $205,241. And I got other income as well. You know, I'm a normal person, lifes. So I've got interest, about $3,000, retirement plan distribution, $20,000. I've invested in an external company, so I get a K1, $150,000. By the way, there's a different podcast that talks about flow-through entities and owning a business. What does that actually look like on your tax return? I got my itemized or standard deductions, $33,000. And for all you tax nerds out there, these are just numbers for math. Please don't hold me accountable for, well, the standard deduction's this. I don't care. Not relevant for this conversation. But if I look at this, my total taxable income, when I add all of these numbers up, $345,241, I'm going to assume a flat tax rate of 25%, $86,310.25. You notice my tax rate is applied to all of my income. Does not matter that it was a bonus, a stipend, I don't care what you're calling it. It's just ordinary income. The different titles are impactful when you are thinking about an employment contract and how much you're going to get compensated, but it doesn't change the taxes of it. All right, now, let's see again what I mean. Let's talk about some numbers here. And you'll see why I'm talking about some numbers, and you'll see why I'm doing this, because I'm trying to save you from getting the look from your accountant when we go, oh my God, that's not what we meant. And more importantly, for you to not be surprised when you get your final tax return. So shifting your understanding that withholding is just a deposit on what your eventual tax liability is, that no one knows what it is until we do the return. We don't know. When we're doing a projection, when you're trying to figure out, well, how much am I gonna owe? And you compartmentalize, I got my bonus, but that's already been taxed. I got commissions, that's already been taxed. I got stock. No, it has not been taxed. Withholding is not, it has been taxed. Let me show you what I mean. I'm using the exact same example. Remember, we came down to your total income tax is $86,310.25. This is your tax liability, because this is your tax liability. Has nothing to do with your withholding. Your tax liability is your tax liability. What makes you have a refund or taxes due is dependent on the deposit that you put down on what you believed your taxes were going to be. You're withholding. You haven't paid anything. In this case, you would have seen on those sample W-2s that I did. Throughout the year, I, Diane Carroll, withheld $13,000. So when I file the return, I still will owe $73,310.25. That is how much I owe. That's not my tax liability. That's how much I owe. My tax liability is the $86,310.25. The withholding just reduces that. Or if my withholding is more than my tax liability, that's why I'm due a refund. This particular slide is a great example, and these numbers are a great example of when people express frustration with their provider that they didn't get as big of a refund as they expected, or they were expecting one and didn't, etc. Or shouldn't I evaluate how well my CPA is doing if they're doing a great job for me based on the amount of refund? That's an unfair expectation. We don't do a great job explaining you can 100% control how much your refund is or how much you owe by adjusting your withholding. If you withhold nothing, you owe a ton, but somehow that's our fault. Or you have a huge refund because you're over withholding. And some people want to over withhold. It's their method of savings. But the point being, if you're working with a professional and you have a relationship throughout the year, you can plan these things so that your refund or taxes, refund or amount due is in line with your expectation. What we want to do is stop the surprises. That's what we want. We don't care if it's up or down. We don't want you to be surprised. We want you to participate in your planning. All right, let's get some more detail here. And I promise I'll get out of the deep dive of the numbers. All right, so what we've learned from this is there's no such thing as I've already paid taxes on it, right? No such thing. What it is you've put a deposit down on what you are guessing, figuring out, talking to your professional about what you're going to owe. So you've got your regular pay stub, and it was withholding at 10%. A whole nother topic about if you can withhold a percentage. But anyway, the W-2 only had 10% withholding. The remittance that you get on your commission because you checked a specific box and your employer asked you and your employee was allowed to, you decided, I don't want any withholding on my commission. I have a cash flow need right now, so give it all to me. I don't want you taking withholding out. I don't want you taking my 401k contribution out. I got a short-term cash need, so I need my entire commission, $120,932.93. So I chose not to withhold anything on it. And then for my bonus, I decided to do an election, and it ends up being about 27%. So you see, these are just withholding amounts. It's not your actual tax liability or your tax rate or anything like that. It is just withholding. So we're also going to get into why does this exist? Why is that the case? So let's take a look at, let me delete the annotations. Got it. I just want to reinforce here. Your effective tax rate, which is how you think of it, how people normally think of this stuff, is this is how much I made, this is how much taxes I paid, this is my effective rate. But it doesn't actually show up in any tax rates anywhere. This particular person's tax rate, total amount they brought in, total amount taxes paid, because you don't know your standard deduction, is 22%, 22.82%. It's just a math calculation. Who knows what that math calculation is throughout the year? Not me, and I'm your CPA, and not you. So you can't pay exactly what your taxes are going to be, pay exactly what your tax rate is, because you don't know it. Nobody knows it until we have filed your return. We do some great planning to figure it out, but we need all of the information. I'm saying this because we have had frustrating relationships with clients because we are doing projections and planning for them, but they only give us part of the information. Because, oh, my bonus, well, I didn't give you my bonus. I've already been taxed on that. We hear that all the time. No such thing, no such thing, no such thing. Okay, so yes, in a perfect world, you would know this is exactly what my effective rate is, and this is exactly how much I need to be withholding so that my tax liability equals my withholding by the time I file my return. Okay, that's not reality. That's not the world we live in. All right, now, let me hit one more. This is it. No, that's it. Go back. Yes, okay. Couple of things. First, why this level of complexity? I know it always helps me to kind of understand the why versus just the what. And also, why does this matter to you? It matters to you because you don't want to be surprised. You want to know how much you're going to owe, or at least have an idea, or how much you do a refund if it's an over refund, because you don't want to manage your money such that you have an over refund. How this comes about is, you remember I mentioned in the example, you have a commission and you have a short-term cash need, so you don't want anything withheld. You're like, look out, I'm doing something else, I'm selling some stock, I'm doing this, I'm buying a house or whatever, I'll pay the taxes later. That's how it's supposed to work. So way back when, it used to be mostly the executive suite would get things like bonuses and commissions and stock options and all these different types of current compensation, but they weren't wages. Withholding tables were created to cover wages. And so the executive will go, well, wait, this isn't wages. The tables don't even make sense with these kind of one-time payment things. So they go, you don't have to withhold. And the rules were, no, you don't. You withhold on wages. Okay, so you get a bonus, you get whatever this other thing is, not wages, other compensation. Great, no withholding, da-da-da. Well, eventually, we get to the point where the IRS finally figures out this isn't working out well. Everyone has plans for being able to make up for this later because our entire tax system is actually set up as a pay-as-you-go system. That's the whole point. And so, well, way too many people were kind of getting caught with, oh, no, I forgot that was going to be taxable, and I had no withholding on it. To deal with this, there are certain laws, and I'm not going to be exact, fair warning for my CPAs watching this who are going to go, but no, it's 22% or 25%, not relevant for the point of this conversation. There are rules that have now been put in place that certain types of one-time payments are required to have certain types of withholding because we're just trying to mitigate, the IRS, is just trying to mitigate you're not being able to pay the tax when the bill comes due. So there are some rules where the company, your employer, can allow you to elect. For this, do the mandatory withholding. And for some of them, the mandatory withholding is 22% or 25% or 20, I don't remember. But it's still just the mandatory withholding. It has nothing to do with you. Nothing to do with your tax rate and where you are. It's just something, some sort of deposit, so you're not totally left just flailing. But again, that doesn't mean, well, I've paid taxes already. Frequently, we have the conversation where an executive or someone with bonuses and commissions like, but how can I already paid taxes. No. You paid the required minimum withholding, which has nothing to do with your tax rate and where your effective tax rate is. If your employer is paying you something currently, it is taxed. I worked for the big four. It was 6 at the time. But anyway, and a lot of companies do different programs and incentives for reduction in healthcare costs, et cetera, et cetera. So there was a wellness questionnaire that I did, and if you did the wellness questionnaire, you got a $100 Amazon gift card. And yes, that $100 showed up on my W-2. Why? Because my employer gave me money. Your employer is not giving you anything for free. They're in business. That's what businesses do. If they want a deduction, then it counts as compensation for you. Of course, we got creative things going on as different types of incentives, but tax law, you got paid, you got taxes. We can call it whatever we want. So please understand that there's no such thing as I've already paid taxes on it. When you are planning your tax life, look at it globally, regardless of the terminology. Know that your tax liability is calculated with all of the information, no matter what your employer is calling it, and no matter what you've had withholding on it. So we're nearing the end. I hope I haven't pushed you over the edge too much in numbers, but if nothing else, you've gotten 2 things from this. Withholding is just a deposit. You haven't paid any taxes. And whatever your employer is calling current compensation, whatever the title is, and again, alternative compensation, where compensation is delayed somehow, is different. Current compensation arose by any other name. You are still taxed on it. Hopefully you found this beneficial. The reason I did this deep dive is because I want to make sure you understand more about taxes and why it matters, and so you're not surprised, and so that you can have a better relationship with your existing financial professional and you guys can work together better with less friction. Thank you. This has been the Tax Translator Podcast. Please be sure to follow me on the usual social media, Cecily Welch, Cecily, Welch, Welch, CPA, on LinkedIn, Facebook, Instagram, and YouTube. And as a matter of fact, remember I mentioned how important it is to have a good relationship with your financial professional. Have you ever tried to figure out how do I speak the same language, or how do I get them to speak the same language? So look, if you are specifically trying to understand they're speaking in circles, you're just trying to get them to speak in a straight line, then also go to theaccountantyoucanunderstand.com. I've got a webinar for you to improve the relationship that you have with your existing financial professional, because we're not great at it either, but we all can do better about speaking the same language, and you'll find it there. I look forward to seeing you on the next podcast. Thank you.